following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 8th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. That's the rule of the universe. It's to toss out those circumstances. Today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go try to figure out what it is they're communicating to you and I. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone. Dial on it at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. We've got kind of a flat market. So let's spend just a moment, because it's really important to always remember, folks, that the universe has 9 very specific rules for you and I to live by. Rule number 1, if you don't move, I won't move. That's exactly what the universe says to us. That means, or said another way, hey, if you sow, you can reap. But the first thing is you've got to sow. Rule number 2, the universe says to you and I each and every morning when we wake, it says, hey, unless you change what you are, you will always have what you've got. Number 3, it says the way you do anything is the way you do everything in life. The universe says to you and I, hey, don't say if I could, I would. Say if I can, I will. It says wherever you are, be there. That means, on your way to work, concentrate on work, not on home. And on your way home tonight, concentrate on home, not the work. The universe says to you and I, hey, don't set your goals too low. If you don't need much, guess what? You won't become much. Number 8, the 8th rule of the universe, happiness is not something that we postpone for the future. It's something that we design for the present. And number 9, time, folks, it is our most valuable asset. Some folks will go out there and they'll waste it, they'll kill it, they'll spend it. But others like you'll invest it. And I want to thank you for investing your time with me. As I said, I'm absolutely grateful for your presence here. This is, of course, terrific Thursday. It is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 13 points at 16,898. S&P's off for at 1991. NASDAQ Composite down 43 points at 47.47. Hey, you got to like that. That sounds like craps 11s out there. If you take a look at the Russell 2000, that's flat. That's trading 11.51. The DAX closed up 22 points. The FTSE closed up 38. Gold trading back $4, rejecting a test of that trend line that it broke out of a couple days ago. We'll take a look at that. Silver, that is trading off 34 cents. Light sweet crude up $1.44, trading at 49.26. Leading the charge here to the upside this morning or this afternoon, depending on what time zone you're in. We've got Acuity Brands, that's up 888. Hey, that's a good number for the Chinese. Chinese believe that. We used to have that 618-8888 number for Tiger Metal Exchange. Intercept Pharmaceuticals, that's up 775. Chipotle's up $7. American Railcar up 5. Core-Mark Holdings up about 5. To the downside, Amazon leading the charge, down $16. Alphabet Soup, meaning Google, that's off $14. We've got the biotechs like Ultragenics, Regeneron, they're to the downside. Insight to the downside. The IBB down $7. We'll take a look at that. Domino's Pizza is in the oven. It's cooking. It's down $6.48. So where do we begin? This is a day that has had a little bit of what you could call whipsaw action. Very little for the Bulls, very little for the Bears. Let's go try to figure out what, in fact, What I can tell you, or at least this is the way that it was about 10 minutes ago. Let's just take a look at this chart here, just a simple 10-minute chart. It is the NASDAQ that is the problem in the market right now. If you're watching this on Tiger TV, I've got two 10-minute panels on my screen out here. The one on the left is the NASDAQ futures contract. The one on the right is the S&P futures contract. 10-minute chart. The yellow lines that are on my screen on the NASDAQ, the top is 43.09, the bottom is 42.92. That's really what's referred to, what we like to refer to as the opening range of the session, of the open, between 9:30 and 10 o'clock. You can see that the NASDAQ from the open, at that 9:30 open, now I'm not talking the contract open, I'm referring to the cash market, basically sold off right from the get-go. And during that 30-minute time, I just simply mark the very high and very low. It doesn't have to be the bar at 9:30. It can be any bar within inside that half an hour. Price, when it broke through that level, came back, tested it, rejected it, and has continued to move somewhat lower. The exact opposite, I won't say exact opposite, but the opposite of what we took a look at inside the S&P 500. So we've got the struggle with regard to the NASDAQ is the weak link out here. So we ought to spend some time, take a look at some of the weighted stocks inside of the NASDAQ, such as Apple. We ought to go take a look at some of those IBB stocks to try to get a feel. Hey, are they pushing lows with volume? You and I, we looked at the hammer candles that formed last week. There was a plethora of them inside of the 114 or so stocks inside of the IBB. Of course, you and I know we only really have to focus on the top 10. They represent 60+% of the weighting inside of that ETF. But as we see right now, it really is the NASDAQ. That's just by taking a look at a simple 10-minute chart out here. So let's stay with the NASDAQ. And let's stay with the NASDAQ. Let's take a look at a 30-minute time frame chart out here for the NASDAQ futures. Now, let me just go ahead and hit the update button on this. It looks like what's interesting here is the NASDAQ, as it has been moving lower, it's got one of your favorite patterns on there where price moves lower, does with less relative weakness. That's that little black diagonal line that is on my screen. And that's what was taking place at exactly 1 o'clock as you and I were getting ready for this show. Now what we can see here is we have a little bullish reversal signal. Now, this signal doesn't really come to fruition for another 17 minutes. So you and I, we just got to hang out and have a good time for the next 17 minutes. And if we do get a bullish reversal signal, and we get some follow through during the next 30 minutes, actually the NASDAQ would be saying, which is a weak link, you ought to at least be able to get it to bust inside that opening range and probably go test the top of that level. You may say, what was that level again, Steve? I wasn't really focused when you were talking about it. That's 43.0975. If it gets above 42.92, you should anticipate that that is what the NASDAQ will do. If we look at a 2-hour chart out here for the NASDAQ, oh, how about this? Now at the high, the most recent high, that took place yesterday, I believe. That was at 12 noon. That was October 7th. Little key reversal, a little bearish engulfing, price moving higher with less relative weakness, a little different than what we looked at on that 30-minute chart. Now you can see that on the 120-minute time frame, price continues to be contained inside that narrow range out here. And that narrow range being our TAS market profiles. And that's a beautiful thing. As we take a look at those market profiles, we know that support, which is down at about the 42.76 level, right where we're trading right now, we know that that's a strong area of support. How do you know that? Because we've got that point of control. We've got those blue dashed lines on our screen that is closer to horizontal dashes out there, and that says that the buyers are just camped out there trying to protect that 55, and it's probably curtains. Of course, curtains means really just some type of retracement, whether it's 0.382618 or back to some level, some logical area of support out here. If we go take a look at the 5-hour energy drink chart inside the NASDAQ, we're going to see also significant resistance up at the high, sponsored by the TAS market profiles. 43.33 is the number. We can see also on the 5-hour chart, and we can see an equal distribution of buyers and sellers with inside these profiles here. So 42.71 is really that key level of support inside of the NQ on that 5-hour chart out there. So that's the weak link. And with regard to trying to, is there anything that suggests that this thing is going to do anything other than bounce around here? Not as far as I can see at the moment. What is the market waiting for? It's kind of like, maybe you get 4, 5, 6, 7, 8 people together to go out for dinner, and somebody says, hey, where do you want to go? I don't know. What do you want to do? I don't know. What do you want to do? That's what the market is doing right now. Really, what the market is doing is the market is getting so very close to either creating a blow-off top or a major bottom. Now, it was really close yesterday. We talked about the Zweig breadth thrust indicator. Let's go check in on what the New York Stock Exchange is doing here right now. And at the close, it was so very close to giving us that major bottom signal. But all it was close. Now, as we speak right now, if the market were to end here at 1:17 in the afternoon, we've got 723 net advancing issues. What's that mean? Inside the New York Stock Exchange, you've got advancing issues of 1,854 and declining issues of 1,136. The difference being our net advancing issues. And I can tell you, with 720 net advancing issues, that would give us the major bottoming signal inside the New York Stock Exchange, saying that last week was a major bottom. On the other hand, if it doesn't do it, well, then we have a few more days, because this signal can form anytime between now and Tuesday out here. And the question is going to be, hey, what do you want to do? And at this stage of the game, I don't know, but we'll find out at about, well, we won't find out at 4. By the time I get all of my accurate numbers, it's like 7, 8 o'clock at night out there. But we'll certainly know tomorrow whether or not we got that signal here today. If we take a look at our next stock, well, we're going to have to look at Amazon, because we're going to go do that with our man Garo in California. Garo, how are you doing this morning?
I'm doing very good. How about you, sir?
I am doing very well. Thank you so much for asking. And so the trade that I know you called about Amazon, but folks want to be updated on what you've done, how that trade was going inside Tesla.
Tesla was very good. Yesterday, I just got out with $1 profit because it came up.
Yes.
And then at the close, half an hour before the close, it gave me a sell signal on $231.57 on
Yes.
a 15-minute. The 15-minute hit the bottom dot, and I shorted their 500 shares again at $231.57. Today, I shorted Amazon too, so my cash was not, it went over $200,000, so it just went over my limit. So I had to get out of a little bit earlier on $224. So I made $7 profit on Tesla.
Well, congratulations. That's great. We saw shortly after you had called in, we saw where Tesla had bounced up and looked like it had taken you out of that trade for a profit. But that's a good thing. Hey, Garo, can you hold on? We've got to go to a hard break here, and then we'll come back and we'll take a look at Amazon. All right.
Sir.
We'll be back. We're going to go take a look at Amazon with Garo. We'd love to hear from you as well. Flat markets out there. The Dow's off 87 cents. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're going to fly out to California, speak with Garo, and talk about Amazon. Ticker symbol there is AMZN. Garo, do you use Amazon very much in your daily life?
No, sir. This is the first time. I was checking a few of them. RAI, that Reynolds American, it is in my radar that I'm going to be shorting very soon. As soon as the daily candle will hit the bottom SAR dot, I have to wait maybe about 2-3 weeks until that point comes. But Amazon was one of the other ones that I was looking at, and I realized that's a very good candidate to be shorted.
And so when you're taking a look at Amazon, are you looking at the daily time frame, or are you looking at a 30-minute chart? Tell me what you're looking at.
No, first I look at the daily chart. On a daily chart, I realize that it is here. Let me bring that one more time. The daily chart. The daily chart is okay. It's okay, but it just went down once on 9/25. It broke that dot. Yeah, and that dot was about $510, and went all the way down to 501. And then it went up again, and now again it's going to come down because when I check the weekly chart, I realize the weekly chart it is weak. The weekly chart is no good, and what I'm thinking is that this is going to come down on a weekly chart. If you look at 21 days SMA, it's going to come down to $487.48.
Yes, so on the weekly chart now, you're saying that it's a weak because of the parabolic SAR dots that you've got. Is that correct?
Yes, sir. We have 1, 2, 3, 4, 5, 6, 7. We have
Yes.
7 dots of it. That means it's 7 week that it can't go higher than the $550.
Yes.
It failed 3 times in these 7 weeks. So and stochastic is already in close to 70. That is my assumption that if this slides from 5 days simple moving average, which is $531, which it moved, it slided. The possibility of coming to 21-day simple move average at 487.48 is very much, because it did once on 10/2, which was October the 2nd, and the other time it did on 8/28, which was August of 28. You see,
right.
It comes all the way down to 21 days, so there is a big possibility that this can come down again to 21 days.
And where are you gonna short it at, Garo?
Shorted it today.
Oh, you did short it today. Okay.
Yeah, today I did that on 15 minutes because the 15 minutes gave me a short for $534, $534.61.
Got it.
It's the third candle on 15 minutes.
Yep.
The third candle hit that dot, 534. That is the value of that dot. So I shorted that, but I got out of at 200-day EMA exponential. I chickened out. That was $4.70 profit. So I got out on $529.90.
Well, that's great. You know, it's at this stage here, it came down on the daily chart. It held that 50-period exponential move or simple moving average at that 522 range. You know, when and again, you're just really looking at this to be able to scalp a few dollars out of each of the trades out here.
Yes.
So,
yes.
You know, what you mentioned the dates, or you mentioned the date of September 29th. And so on the daily chart, it had come back. The volume there was about 4.5 million shares. And what it was doing, Garo, was it was testing that August 24th swing point that had 10 million shares. And it rejected that. So although I hear what you're saying, you know, the weekly chart, if you take a look at the parabolic SAR, says, okay, it's you know, it's lost its energy, it's lost its mojo at this time. At this stage of the game, it's just really trading sideways, you know, in between that 550-ish area down to the, you know, 490, you know, type range out there. So I can see what you're doing for sure. I would say on the daily chart, it hasn't really given up. It looks to me like utilizing your system, it wouldn't give it up till it gets back below that 497 type area.
Absolutely. You're right. Yes. On a daily chart, is strong. You're right. But on a weekly chart, it's not that. It's not weak, but it's not strong either. Yeah.
I hear you. Yeah. Hey, Garo, great to hear from you. Thanks so much for calling. You bet. Have a great day. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, sorry about that. I seem to have lost my internet connection and I'm down. So when that gets back up, I'll repost it to TigerTV and Inside the Den. But nonetheless, I can at least discuss the markets, or we can discuss life. And why don't we do both? But let's first discuss the markets and really what they're doing. I think I had mentioned earlier that gold, when we took a look at the price of gold, it had traded lower by about $10 or so earlier in the morning. And for many of you, you may remember that gold has been trading within a trading range that was really established. The upper end of that trading range was really established by lower highs. And we take each of those lower highs, we take the top of those lower highs, and you and I look for the most significant swing points. And in the case of gold, if you go back to the gold contract, we look at the January 22nd high out there. That was priced at about $1,309. And then there was another high that formed on May 18th. Inside gold, that was around the 1234 range. And that level the diagonal of that line has held as resistance for quite some time. Now, what gold did a couple of days ago, that's on October the 6th, what gold did was actually broke out above that descending trend line. It had done that, by the way, on September 24th as well. But then the very next day, it came back inside the range. That means that it closed underneath that diagonal line out there. And once it did that, it said, hey, it seemed like it had the energy. If we looked at the bar, the candle, we looked at volume behind the move. But the bottom line was, once you come back and you or you fail by being able to stay outside that trend, you'll come back to some area of support, which is exactly what gold did. It came back into a rising trend line that was in place that actually began establishing itself on July 24th out there. Well, 2 days ago, on Tuesday, October the 6th, gold broke above it. Then yesterday, stayed above it, came back and tested that trend line. Hopefully I'll be able to get the system up here so that I can show that to you momentarily. But I'm at least describing it to you so that way you know what it did. And this morning, even though it pushed back with price, it still has rejected that trend line. So at this stage of the game, what you and I know about gold is it continues to say, hey, I don't want to get back in that old trend anymore. I don't want to continue going lower. Now, what does that mean? Does that mean that it's found the ultimate of bottoms out there? That I can't say. What we can say is that at this stage here, gold has done what you like to see. If you're bullish or bearish, you want to be able to get messages from the market. And in the case of gold, it's given both the bulls and bears a message that it's not ready to continue with its trend to the downside. Okay, this is good. Steve, if you're listening, I'm going to go ahead and repost Inside the Den. Looks like we've got that piece up and running. So that'll be good. Right back here. Okay, good. So we've got that. So you're taking a look at my gold chart right now, and as long as gold stays above, we'll say it's going to be today's low, which is 1135. If there's a bad close in gold, that'll not be a good thing, because what it will say is that gold is going to go run down to the bottom of that rising trend line, somewhere around the 1113 type area out there. So we'll keep our eyes on that. I'm going to also try to go ahead and re-log in so I get off this cell phone, which probably doesn't sound as good as the normal our normal way for communicating with you guys. There we go. So I think we should be all set. Steve-O, just give me the high sign, and then I will know. So in the case of gold, it has performed very well today. Okay, he's got it.
Inside some of the mining equities, let's go take a look at Rand Gold, see if we can get some other confirmations as to what gold and the miners are doing out here. Now, in the case of Rand Gold, one of the relatively strong mining stocks out here, we can see that it has traded into its swing point. That's the August 21st level. Now, at the swing point, as Tom likes to say, that's where the market walks, squawks, and talks. I think I've got that right. What you and I like to use that for, and what that actually means, is that if you're moving into a swing point with volume, there's a pretty good chance that the troops are going to be able to overtake that line. And that line is August 21st inside Rand Gold. 1.4 million shares is what was traded. And yesterday, it moved into it with 1 million shares. So it was coming in light. And when you come in light, it says, hey, I need reinforcements. I need some troops out there. Well, if we take a look at the action today, light volume again. You've done 643, not you, but it's done 643,000 shares, 643,000 at 142. What is that? We've traded for a little over 4 hours, 4.25 hours. It says maybe you do about 983, even less volume than yesterday. So Rand Gold is just simply going to be struggling here. Now, does that mean that the move is over? No, not necessarily. And the only way that the move is over inside of Rand Gold or any of the mining equities is going to be if gold fails. So if gold gets back inside that trend line out there, then what you can expect is the signals that are coming here from one of the stronger equities like Rand Gold, you'll see a pullback. Where will Rand Gold pull back to? It could pull back easily into $60.98. That's September 18th level that we're taking a look at. Let's go take a look at Agnico Eagle, AEM. It's up 12 cents, 2.1 million shares. Now, Agnico Eagle, this had completed a 1-to-1 A to B equals CD. That's just the lightning bolt pattern. That's a way for us to measure where price is going. That's what this pattern is best used for. It's also best used to help us identify where the end of a move is. Well, in this case here, it's not the 1-to-1 A to B equals CD because those only complete 60% of the time. So 60% of the time, you can say, hey, we know where price is going to get to at least when it crosses one of those swing points, or what we refer to as a B point out there of that lightning bolt move. And it did it. But it was doing it with volume. And what Rand Gold, not Rand Gold, but what Agnico Eagle did this morning, it pulled back, and it pulled back. Now, yesterday, the pullback was on a bit too much volume, 4.8 million shares after making a high with 5 million shares and after breaking out with 5.3 on October the second out here. But things still look pretty good in paradise out here. Looks like just some sideways actions to really build up. You know, I guess you could say the mining equities were looking at gold this morning perplexed, saying, well, you broke that trend line. What the heck are you doing going back to revisit it? Look, as I was trying to mention, I think before we got cut off, what bulls and bears like to see are confirmations. And a confirmation of being able to break out of some area is the ability to come back and test it and reject it. And thus far, that's what we've got with Goldilocks. If we go take a look at some of the currency pairs out here, your friend and mine, that's the euro, Japanese yen. Really, and the reason why it's your friend and mine is because it's the liquidity gauge for the markets. If this currency pair is moving higher and you see the stock market moving lower, I can tell you who's going to win that battle in the end, and it's going to be the currency pair. Eventually, the market will get the memo and say, oops, I was headed in the wrong direction. At this stage of the game, inside the euro, Japanese yen, really, even though it's a nice little green-bodied candle here, just really sideways type of action out here. But there's nothing negative. There's nothing substantially positive. We're going to call it pretty much neutral. If we go take a look at the euro versus the U.S. dollar, you're going to see a similar type pattern out here. Nothing really negative, but again, nothing really positive. And when you talk about neutral, well, that would be the Japanese yen itself versus the U.S. dollar. You see a series of doji candles. That's where the tug of war, you know, if you had this little tug of war, you know, with a team on the right and a team on the left, and you're trying to get, you know, the other team to rock and roll. Well, inside the Japanese yen, the rocking and rolling isn't getting anywhere, and that center spot is the center spot. That's what we refer to as a doji. Didn't go anywhere higher or anywhere lower. So there's no real indication as to what it wants to do. You know, we were looking at Amazon with Garo, and the stock itself looked pretty good. Some areas of weakness, but for the most part looked pretty good. Let's take a look at Apple. When we began the show, we know that it's inside the NASDAQ where the real struggles are. As we take a look at what Apple's doing, Apple today, trading out right now 108.57, testing the high of that August 24th swing point, which is 108.80. We've seen price basically trade with inside a sideways rectangle, with the highs being in the 117, 116.50 area, the lows being about the 105-ish type range out here. So even if we see Apple close into the August 24th swing point, until it really breaks below that rectangular box out here, I'll call that price level of 105.65. It's not doing a whole lot either. Not breaking out, not breaking down. How about some of the, let's go take a look at what's going on inside the IBB sector. Let's take a look at, I think if I still have them up here, let's go over, no, it's not there. Is it there? Just looking, there we go. Yeah. So Celgene's the number one equity inside of the IBB, 8%, off $1.56. As we take a look at the daily chart for Celgene, we know that a couple days ago, October 6th, it pulled back and tested a swing point. That would be the high of the September 28th area. That high was 108.63. You pulled back to a price point of 108.66. You did the test. 8.4 million shares, was testing 11 million shares. It couldn't bust them down. Now it's going to try to bust them up. Celgene ought to make a run. Once it can clear 118.75, its next level of resistance is going to be the 125 area. And that's what Celgene ought to do here over the course of the next several days. If we take a look at Biogen, BIIB out here, this has looking pretty miserable. But of course, you and I know, and this is the number 2 weighting structure inside the IBB. It's got those passengers stranded on Gilligan's Island, and that's out here in the trading days of March 20th, the 23rd, and 24th, creating that island reversal. That's where the market strands you. It doesn't come back to rescue you anytime soon. So hopefully those shareholders have got some good food and water supplies, because Biogen, BIIB, does not look very healthy. If we go take a look at Amgen, I don't know what Biogen makes, but they ought to take some of their own medicine out here. If we go take a look at Amgen, the number 3 weighting structure inside of the IBB ETF out here. What it did a couple trading sessions ago, 5 it looks like to be exact, it was testing the swing point out here from September the 28th, the top of which was 138.19. That had volume of 7 million shares. It was tested with 4.8 on October the 6th. Could not bust them down. Amgen's going to make a run for 154.42 to 156.21 on its continued move higher. Let's go ahead and finish this off and take a look at one more. Let's take a look at roll the dice, Johnny. That'll be Gilead Sciences. GILD is the ticker symbol. Now, Gilead, what it actually did was came back and tested a swing point from December of 2014, and it rejected that area. Now, this is struggling, and it needs to clear 101.28. Otherwise, it's going to take a visit down to the 93.50 area one more time. Of course, in the movie, what was that movie? Roll Tide, One More Ping, Vasily. What's the name of that? The Hunt for Red October. That was a great movie, was it not? Hopefully you're having a great day. Great to be back with you. Luckily, the internet gods have got us back online. This is Steve Rhodes with TFNN. We'll be back in just a few.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. And yeah, stay tuned. David White will be up next. Maybe the market will get rolling. I've got a report here. Says the FOMC is releasing their minutes at in about 6 minutes or so. So maybe we'll see the markets, do something at this stage here. Basically, we're relatively flat. Here's what you want to look for. I'll give you a couple things to look for by 4 o'clock. If the markets are extremely overbought, that doesn't mean that they can't move higher. If they do move higher between now and 4 o'clock, if we do take a look at a decent close inside the New York Stock Exchange, like where it's at right now, 892 net advance in issues, it will have given us a very significant major bottoming signal. Now, we can use that in two ways. Number one, that says what you want to do because we're in an overbought market is wait for the next retracement. That next retracement should be pretty near out here. But in order for that to be the case, you've got to get a good close today so we get that major bottoming signal, because if we have a really lousy close today, what we really might have out here is an exhaustion move. We might have a head fake out here. We might have the next most significant high in the market between now and some time to come out here. So the market truly is at a precipice. It doesn't have to resolve that condition today. It can resolve it tomorrow, but it truly could go either way. And what's most important, as we can speak right now, is going to be the close today. A strong close. That's going to say that the market has put in a major bottom. That says that you'd want to be looking to buy the next pullback. Again, in a horrible close will make you say, something to think about. and maybe take action to the short side. So that's the way things are set up. If we go take a look at the VIX index out here, it's trading below the 50-day exponential moving average. That, by the way, is priced at about 21.16 right now. The pattern that exists inside the VIX index, because it traded below that level, because it is trading below that level, says it wants to get down to around 1465 or so. And if that's the case, the markets are going to zoom, zoom, zoom higher. Again, doesn't have to happen all at once out here, but as I take a look at 30-minute and 120-minute and 5-hour charts out here, does suggest that a pullback is in order sometime soon. If we look at the summation index out here for the New York Stock Exchange, it's a thing of beauty right now. The reading is 263. 263 is its price oscillator. Let me see the last time we had a reading in the 260s out here. The last time we had it was all the way back here on October 31st, 2014. The New York Stock Exchange continued to go higher up until about November 25th out there. So you're at a, so yes, things can continue to get even more overbought. Now, the only pattern, not the only pattern, but one pattern that you see the price oscillator here for the Dow. A bad close is going to set up a declining price oscillator where price will have moved slightly higher, similar to these little red lines that I've got back here. If you see where my cursor is at on, if you're watching us on TigerTV out here. So that's something to be focused on, especially since the Dow diamonds on the index itself tested the high of September 17th yesterday, the high being 16,933, closed underneath it, and it did it with light volume. Again, we're seeing a test of that area, 16,933. So that's another number to pay attention to. If you get a close above that today, what that says about the Dow is she ought to head up to that 200-day simple moving average, 17,608. Folks, thanks so much for joining me today. Stay tuned. David White will be up next. Then we've got the Tom O'Brien Show.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.
Okay.